Welcome to Blue Nile. We now look at a topic concerning a company called Bullfinch. Exam question overview deals with 1. Audit reports. The audit report communicates the auditor's opinion on whether the financial statements are prepared in accordance with the applicable framework. Types of opinions. Unmodified opinion. Financial statements are free from material misstatement. Modified opinions. Qualified. Material but not pervasive misstatement or scope limitation. Adverse. Financial statements are materially misstated and misleading. Disclaimer of opinion. Insufficient audit evidence prevents forming an opinion. Structure. Opinion paragraph. Basis for opinion with explanation for any modifications. Key audit matters if applicable. Responsibilities of management and auditors. 2. Subsequent events. Subsequent events are events occurring after the reporting period but before the financial statements are authorized for issue. Types of subsequent events. Adjusting events. Provide additional evidence of conditions existing at the reporting date, for example, resolution of a court case. Non-adjusting events. Indicate conditions arising after the reporting date, for example, natural disasters. Audit procedures. Review post-reporting date transactions and events, for example, minutes of board meetings. Legal correspondence. Inquire of management about any significant developments. Inspect subsequent receipts or payments for adjusting event indicators. Assess the adequacy of disclosures for non-adjusting events. 3. Audit procedures. Key audit procedures to address audit risks. Revenue. Verify timing and accuracy of recorded sales. Inspect contracts for unusual terms. Inventory. Attend inventory counts, test valuation, and confirm cutoff receivables. Perform confirmations and review subsequent receipts. Subsequent events. Review post-year-end adjustments and disclosures. Exam answer tips. Clearly differentiate types of opinions and audit reports and their triggers. Explain the purpose of subsequent events, procedures, and their impact on financial statements. Use specific examples to illustrate substantive procedures relevant to risks. We are going to look at a question called Bullfinch. This is question 4 from the December 2014 exam and is for 10 marks. Included in the question are the following syllabus areas: audit reports, subsequent events, and audit procedures. You must be careful with timing in the exam, especially with a Section B question containing a scenario. The volume of information in the scenario must be absorbed to ensure a pass. Therefore, aim for spending 1.8 minutes for every mark. This question should take you no more than 18 minutes. To successfully complete this question, you will need to plan your answer, taking care with the time allocated to each part of the question. Use the scenario where needed, and have clear and efficient communication. It may be worth pausing the video at this point and printing off the exam question. That way you can follow the scenario as we talk through it. As with any question containing a scenario, it is important to plan the answer and use the information that has been provided. Reading the requirements before the scenario really helps you focus on the important parts of the scenario when it is time to digest it. This is crucial given the time you have in the exam. Let's now break down the requirements. Part A asks you to describe 4 elements of an unmodified auditor's report, and for each, explain why they are included. This question is for 4 marks, and therefore around 7 minutes should be spent on this. Please note that this original question refers to ISO 700. Since then, this auditing standard has been revised, and if this question was to come up in your exam, the contents of an audit report has changed. The suggested answer on the ACCA website has not been updated for your exam. I will therefore go through all elements of an unmodified auditor's report as per ISO 700 revised when we debrief this part. Part B is split into 2 parts. Part 1 asks to explain whether or not the 2014 financial statements require amendment. And Part 2 asks to describe audit procedures, which should be performed in order to form a conclusion on any required amendment. These requirements are for 6 marks, and it states that the marks will be split equally, so that's 3 marks each. For 6 marks, you should be spending around 11 minutes on this part. The scenario within this part contains an event after the reporting period. You must decide if it impacts on the current financial year statements, using your knowledge from accounting standards. Let's now start structuring your answers. Part A. We must identify 4 elements of an unmodified audit report and explain why they are included. As I explained, the audit standard ISO 700 is now revised, so I will outline all of the elements of the new look audit report. The sections of the audit report in order are as follows. The title, addressee, auditor's opinion, basis for opinion, key audit matters, other information, responsibilities of management, auditor's responsibilities, other reporting responsibilities, the name of the engagement partner, signature, auditor's address, and date. To achieve the full mark for each element, you must show your understanding of what it means and why it is included. The title is a clear heading stating the report is an independent auditor's report. This is included to clearly identify the report as an independent auditor's report. The addressee is whom the audit report is for. It will state it is for the shareholders of the company that has been audited. Its purpose is to ensure the intended user is clearly identified. The auditor's opinion is next. This is the paragraph that states the conclusion reached by the auditors after reviewing the financial statements and books and records. For an unmodified report, it is to state that the financial statements are true and fair. The basis for opinion section includes a description of the professional standards that have been applied when carrying out the audit. This is included to give the users of the information confidence that the opinion can be relied upon. Key audit matters is a new section. This will include matters found during the audit that the auditor feels are significant to communicate. The purpose is to aid understanding of the entity for the users. It is not a compulsory section, as it officially applies to listed companies. Other information is to inform the users if there is other information that has been included within the financial statements that has not been audited. It is to inform the users of areas of the financial report that have not been audited, but may have been reviewed by the auditor. An example would be the chairman's report, which does not form part of the financial statements. The auditor reviews it for consistency. Responsibilities of management states that the management are responsible for the preparation of financial statements. This is included to reduce the expectation gap. The auditor's responsibilities section outlined their responsibilities for the audit of the financial statements. For example, it states that they must give reasonable assurance as to whether the financial statements give a true and fair view. Its purpose is also to reduce the expectations gap. Other reporting responsibilities include any additional reporting responsibilities for the auditor. This could include specific legislation for the industry or the geographical area that must be reviewed by the auditor. This highlights any additional reporting responsibilities to inform the users. The name of the engagement partner is the name of the practitioner that formed the independent auditor's opinion. Its purpose is to identify the person responsible in case there are any issues. The signature is of the engagement partner. This confirms their agreement of the information included in the auditor's report. The auditor's address is the audit firm address. This again is included in case there are any issues that users wish to raise with the auditors. Finally, the date is when the engagement partner signed the audit report. This is to confirm the date when audit work was finalized. Any information after this date will not have been considered in the audit. 4 would need to be selected and explained properly for the 4 marks to be awarded. Please make sure you are familiar with the revised contents of an audit report to ensure a pass on this syllabus area. Part B focuses on the scenario about Bullfinch's audit, which is nearly complete. It has come to light that a key customer is struggling to pay their debts, and the finance director wishes to write the balance off in the following year's financial statement. Part 1 wants you to explain whether or not the 2014 financial statements require amendment. As the marks are split equally between each part, this requirement is for 3 marks. We must therefore think of 3 things to say with regard to the amendment of the 2014 accounts. A good approach to this type of question is as follows. Calculate the size of the issue to decide whether it is a material concern for the auditors. Explain the correct accounting treatment with reference to accounting standards. And finish with explaining the impact this has on the current year financial statements. The receivables balance in question is $283,000, which is 7.4% of profit. It is also 2.5% of revenue. Comparing this to the recommended guidelines for materiality, the balance is material to the users in both respects. The balance may have been detected as a bad debt after the year end. However, it would not have been recoverable at the year end, as we assume they did not discover they had financial difficulties overnight. IAS 10, Events After the Reporting Period, states that if the condition existed at the year end, even if not discovered until after, then it is an adjusting event. This bad debt falls into this category. The impact on the financial statements is that the 2014 accounts will require amendment. The debt should be written off this year rather than in the following year. Otherwise, receivables and profit are overstated with a material misstatement. Part 2 then requires you to describe audit procedures which should be performed in order to form a conclusion on any required amendment. We have 3 remaining marks and therefore need 3 audit procedures. Remember that an audit procedure should be written as a clear, detailed instruction of what the auditor will do and why. Here are a few ideas. The auditors should inspect customer correspondence with Bullfinch to identify whether further communication has been received to decide if they are able to pay their debt. The auditors can then inspect post-year-end bank statements to identify if the customer has made any payments. The auditor should then discuss the amendment with the client management, explaining to them the correct treatment and the impact on the financial statements and audit report if the amendment is not made. Please remember, to be successful in this type of question, we need to plan the approach and ensure we have identified how long is needed for each part. Use headings to introduce your answers, reference to the question you are attempting, and space out your points so it is clear for the marker where the marks can be allocated. Finally, if there is a scenario, use it. This information was given to you for a reason, and at F8 they are trying to see if you can apply your knowledge to a given scenario, and not just be able to remember the facts. I hope you found this video useful. Thank you and good luck.